Good morning, Tony Sycamore here, bringing to you a video analysis of the 5 key charts of interest for the week ahead. Let's start with a different market this week. I want to look at what has been creating all of the volatility at the back end of last week in all asset classes across equities, FX, commodities, you name it. And it is the US bond market. And what we've brought up before you is a chart of the US 10-year yield. And the important thing about this chart is you'll notice after the US 10-year yields broke above this 0.95% high, in early January, US yields have moved significantly higher. So from around 0.95% up to 1.56% as of Friday. The retracement from off the high was a good thing to see, but what really is creating trouble for the market, and this was in a client note put out by JP Morgan, higher rates has been a consensus trade in the market since the end of 2020, but what has not been a consensus trade is for acceleration to the upside. And when you look at the daily chart, you can see just how far or how quickly those US yields have accelerated over the last couple of weeks, up to this 1.56% high. Now, some selling came in on the close Friday. Now, whether this was market on close type rebalancing flows, as you know, we're at the end of the month, remains to be seen. But what we need to do is see less of this acceleration to the upside, because it does permeate into other markets. And it's been a good reminder that bond markets are the dog that wags the tail, not the other way around. Looking at how that impacted US equities, well, in last week's video, we were talking about the potential for this little red candle to become a false break. It was certainly an inconclusive break higher out of the trend channel, and we were open to the idea of a potential false break. And of course, last week, the US equity market finished about 2.4% lower. That's the S&Ps, which is about 20-25% made up of tech stocks. The NASDAQ fell a lot more than that, about 3.5%. Looking at the daily chart of the S&P 500, and this is really critical for the week ahead, we need to see the S&P 500 hold this trend channel support coming in around 37.30, 37.20-ish. I would be looking for signs of basing here before another rebound up towards the top of this trend channel. If you look back through the price action over the course of the last 4 months, it really has been 2 steps forward, 1 step back, 2 steps forward, 1 step back. I don't think anything different is happening at this point of time, unless we were to see a sustained break above this trend line support, in which case I would expect to see a test of 3,500 coming from these lows across here, and also the 200-day moving average, which is coming in right now around 34.50-ish. Moving to the local stock market, the ASX 200, an interesting week for the ASX 200. It has been very similar to the S&P 500, a process of 2 steps forward, 1 step back in this ascending trend channel, the lighter channel you can see here. However, the close on Friday was certainly dominated by heavy selling, and you can see now that it's closed below this trend channel support, in which case I am now looking towards the blue support line, this range, which is just horizontally drawn here from across these 6,500 lows. That should find support coming in around here. And as we wrote in an article a little while ago for City Index, this has been our preferred buy zone for quite some time. So keep an eye out for stabilization, basing in this area in the coming week. Turning to currencies now, and I'd like to look at the DXY this week, because I think it gives us a really nice overview of exactly what's going on in the markets. This is the COVID high, and since then there's been a nice 5-wave decline. What you are seeing now is part of a corrective sequence or counter trend type price action that I think could see the DXY push up towards wave equality coming in around 9,200. So this is wave A of a corrective sequence, wave B, and then I'm looking for a wave C up towards 9,200. So the expectation is, should we see the DXY push above 9,100 in the early part of this coming week, then there is a good chance you can see it retrace further up towards this level here, courtesy, of course, of those US yields. The short end yields are also moving a little bit higher in that 5-year part of the curve, which does bring in some support for the US dollar. Finally, this week, Bitcoin. And Bitcoin has proved itself to be somewhat of a risk asset in terms of when equities are going up, so too has Bitcoin. Now, Bitcoin put in place a nice little high up here, which is potentially a wave 5 high. When you look at the longer term wave count, here we got our wave 1, 2, This is the acceleration for wave 3, wave 4, and typical of a wave 5, we're starting to see some divergence there on the RSI indicator. It's not conclusive yet, but the uptrend has seemingly broken, which in the initial instance gives us some technical damage. However, I do need to see Bitcoin break below this high here, the January high of 42,000, to really get a firm or a more certainty that Bitcoin does have downside towards this 200-day moving average, 32,000, potentially down towards this low here, 28,000. Unless that occurs, unless we break 42,000, I think you need to give the uptrend the benefit of the doubt. That's all this week, folks. Thank you very much for listening. If you are interested in receiving more of our trade ideas, please see our website for our technical reports. Thank you.